Hello, everyone. Happy Sunday. Let's get the chat pulled up here. Alrighty. Should be good to go. Audio check. Alrighty, guys. We're good to go. Hope you guys are all doing fantastic. Watermelon and coconut juice here. Alrighty, guys. Let's get into it. What a close of the week, huh? All right, let's go ahead and unpack it. How we doing, everybody? Keto, good afternoon, sir. Paul, what's going on, man? Amy, hello, hello. Viking, good afternoon to you, sir. Eslam, glad to have you, man. Joe, happy Sunday. Happy Sunday to you, man. Just saw your picture in the Discord, man. Got me hungry before the before my session, man. Looks good, Joe. Adrian, hello, sir. Alrighty, guys. Let's go ahead and get into the business here. Before we get into it, a couple things to keep in mind. The government shutdown is obviously a big factor. Trade issues with tariffs and all that good stuff is also a big factor. So a lot of things being thrown at these markets right now. So it's to be expected that there's going to be wild price swings, violent moves to seek liquidity. And the market's doing the same thing it's always coded to do. It's just going to do it with more ferocity, more violence because of everything that's going on. So that's a perfect excuse for market makers to move these markets all over the place. So very important to keep in mind the climate that we're in right now. Unfortunately, I'm sure you guys as traders have heard a lot of stories over the weekend, a lot of people taking their life and just all types of crazy things happening as a result of what these markets are doing. And before I even get into the analysis and how I'm going to be making money this week, I want you guys to know that in this climate, you absolutely have to respect the risk. Respecting the risk is more important than making in the short term because you have to stay alive. You have to stay in the game, right? And the way you stay in the game is respecting the measure of risk in these markets right now. So even though it's precise, we know what we're looking for. You're going to know what we're looking for at the end of the session. Do keep in mind the amount of risk that's in these markets right now. So a lot of reasonable responses to that. You can size down, be more selective with your setups, and you don't want to be in here gunslinging like a cowboy with crazy leverage because the market can take your head clean off if you don't know what you're doing. So I want to start things with that. I don't want anyone to get hurt, especially not anyone that's following this channel here. And before I get into the rest of the business here, going forward, every single morning you guys will have pre-market analysis from me directly in the Discord. So on Wednesday, called the drop into this bullish breaker. Good information to have, knowing the market was going to drop down into that. Personally, I didn't take the short into the breaker because for me, I wanted to get the long setup that was going to form off the breaker. So I was looking for it to drop to go long. Several that were live with me traded it, banked on it, and knew it ahead of the session here in this short video recording. And then the following day, obvious equal highs, London low of the day, dropped down, bullish order block, and then a nice price run into these equal highs. And that ended up delivering beautifully and allowing me to make money. So if you guys want to know what setups I'm going to be looking at, what levels I'm going to have in my pre-market, that I'm going to be going into the market and actively hunting for setups, and you want to know exactly what those levels are, be sure to join our free Discord because I will be sharing that every single day that I will be trading going forward. So that again, you guys are going to know exactly what levels I'm looking for and what I'm going to be trading off of. So then when you guys see my trade executions after the fact, you're going to know how I'm framing those levels and those setups. And eventually, again, you guys are going to be able to do this all on your own, which is the goal. So let's go and get into it, guys. Looking at the dollar monthly chart. So we've been talking about how strength in dollar will eventually weigh on the indices, but you have to trade what the market's giving you, which has been bullishness for the past 3 to 6 months for equities. So on that point here, before we get into it, the market has been bullish up until Friday, right? So a lot of people were trying to call the crash, say the market was going lower, and they were right, but a lot of them lost their ass in the process because they're trying to short a bullish market. And like we talk about, don't call a top. When the top is in, it's going to be in, and they're going to show us that. What you don't want to do is miss out on all this upside run trying to go short, or worse yet, lose your ass because you're going short in a bullish market. So we've talked about how eventually the strength in dollar would weigh on indices, and we're seeing that now. However, up to that point, it's been all what? Buy side flows, bullishness. So when we talk about not calling a top, this is what we're referring to. And then when the top's in, it's going to be in. And we made money on Friday going long into the levels that I gave pre-market. And it was pretty straightforward, easy money on Friday. And the run, who cares about it, right? Because again, we're here to get paid. We're here to make money. And that was absolutely done last week. So with that in mind, the purpose of analysis is to know what levels and targets you're going to use to frame setups. Being right or wrong at the end of the week does not matter, because if we look at the weekly candle here for NASDAQ, technically I was incorrect, right? Technically we were looking for a bullish week, but it ended up dropping. But guess what? Was money still made last week? Absolutely. And that's the whole point of why we're here. So don't get caught up in the right or wrong. It's about what is the market going to draw to and how are you going to use that to frame setups that you can trade. Then you can start to pivot as the market gives new information. So we'll get into all that good stuff here in a moment. Just wanted to clarify how all that kind of comes together here. So looking at the US dollar here, bullish order block, last down close candle, hit 50% of that, rallied. By the way, guys, have your questions ready to go at the end. Going to keep this one short, concise, straight to the point. So if you guys have your questions ready, that'd be awesome. And I'll touch on your guys' lovely questions as usual and keep things moving. So bullish order block here on the monthly, we hit that. We hit the mean threshold, or in other words, the 50% of it, rallied higher. If we continue to see strength in US dollar, I'm looking for this weekly gap here above market price. Working down into the weekly chart here. So we talked about bullishness off this low here. So they swept the low. That's going to be a stop run for the market to trade higher. We called that, and then we're looking for the market to expand up into these levels here. Whenever you have a large wick like this, like we talked about, always have the 50% of that level, because it may not get to the high, but it'll usually always get to 50% of that wick. So whenever you have a large wick, always be mindful of the 50% or the consequent encroachment of that particular level, and you'll see that's what made the high of the week last week. And if you were demanding the high, you would have been left holding the bag. So always make sure you guys are using midpoints of wicks, especially when it's an elongated wick like this. So off the sell side run here, nice run higher into the 50% of this wick. I want to see how we trade here going forward. If the market is to remain bullish, we'll want to see the market trade to and through this wick. 50%, get a closure above it, run for this high here, eventually this high back here. And then if we see bullishness longer term, then we could break this range high, range low, get the 50% of it here, and that would give you this level here. So for bullishness, buy side of the curve, looking for the market to trade up into these levels here. Again, though, because we are in black swan territory, that could change. But as of right now, with the current market structure and order flow, that's what I'm going to be looking at. Again, do keep in mind, though, when we do open on Sunday, this can all change because we could see a crazy gap opening. So take everything I'm saying here with a grain of salt. This is what I'm looking at with the present information I have. But you'll have to see how the market trades at the open and then how we trade going into Monday and Tuesday. Do keep in mind, Monday's a bank holiday, so I still wanted to go live anyway. I'm still doing my pre-market analysis, so I said, I might as well just go live, share what I'm looking for anyway. But do keep in mind, we do have a bank holiday on Monday, so trading will pick up on Tuesday. So with that in mind, looking for this level here, consequent encroachment, 50% of that wick, really nice delivery, and then we'll look for the high as long as we see continued expansion higher. Working down into the daily chart here, so we had this nice inversion, fair value gap here after the sell side liquidity run, hits it, leaves the lower half of this gap open. That's a breakaway gap idea. That's exactly what we want to see. Two down close candles, that's your bullish order block, traded down into it, nice expansion higher into that, and then clearing out the relatively equal highs here. So if you guys remember, we talked about last week, when they left these equal highs here, that's bait. They're baiting uninformed money, because uninformed money sees what, a high, another high, and then they see it drop, and they're thinking, wow, man, we got some really strong resistance here. Or we got a demand zone, or would it be a demand? Yeah, a demand zone, or we got a demand zone here, right? Whatever they're looking at, it doesn't matter. We just understand that the market's bullish, and they set these types of traps to manipulate uninformed money. They drop it down, bullish order block, reaccumulation, and then they bust through the highs, and more specifically, reprice it into this imbalance here. So from this high to this low, that one single pass is inefficient, so the market will look to trade up into that level, and then you can see just a really nice delivery all around, closing in that gap here. So now that we reviewed what the market did in the previous week going forward, now with that in mind, that we saw this displacement higher here, imbalance here. If we trade down into it, I'd want to see it find support here. We would not want to see the market get below this wick here. So I'd like to see it stay above this imbalance here. It can trade a little through it, but I would rather see it stay above the Monday, October 6th daily wick. I want to see it stay above that. And then if we do, then we could look for continued higher prices here into this high here, close in this inefficiency here, and then potentially trade up into that again, that monthly gap that we're watching up here. But again, we would need to see institutional order flow remain bullish. All right, 4 hour chart, you can see we traded up, hit that 50% of that weekly wick. Market retraced on Friday, which is expected, right? If you have a one-sided week, Thursday, Friday can give a retracement back into the range. So we saw that on Friday, and now we're trading inside that imbalance that I have on the daily chart here. So be mindful of that level going forward. How we trade there will be influential. Ideally, this gap down here, I know generally we look for gaps to get filled in the proper context though. Ideally, we would not see this gap here filled. If we are going to remain strongly bullish going forward, I want to see this act as like a breakaway gap idea, and it would not be bullish for the market to trade all the way back down to that level. So keep that in mind. So if we do break down through that daily gap, start to respect it, and then roll over, then that would take us into that gap. But as of right now, I want to stick with the bullish order flow and the underlying strength that we're seeing in dollar. Now, where it gets interesting is when we ring in the bond market here. So on the heels of what transpired on Friday, huge repricing higher on the bond market. So higher treasuries, lower yields, lower dollar. So the intermarket component is not being seen right now. So I will be watching bonds and how we trade going forward. But as of right now, if we go up to the weekly chart, we are seeing strength in bonds. So we had that drop the last couple of weeks that we were looking for into that imbalance on the weekly chart that you see here. Let me just put it on one crosshair that you guys can see here. And then from there, the market just ripped higher. So we did not get below that weekly imbalance. And in fact, it's showing strength. So I'm getting a conflicting signal here with strength in dollar and also strength in treasuries, which usually we want to see the opposite. So do monitor that going forward. Looking at the daily chart, the market does look strong. So they may want to reach for the buy stops up here. And then we'll have to see how that's going to influence US dollar going forward. So right now in this climate, it's going to be a lot of waiting, assessing, and seeing if we can get things to come back in sync. So ideally, higher dollar, we want to see lower treasuries. But as of right now, we are seeing strength in treasuries. So that's something I will be monitoring going forward, because if treasuries keep ripping higher, then that would be a cause for concern for higher prices as well on the US dollar. So do keep that in mind going forward. And yeah, that's it for bonds. Let's go into NASDAQ here. Let's put that on the daily chart. All right, let's take it from the monthly here. And let's remove that off the monthly chart. All right, lovely. All right, so we had the opening for the month of October here on this candle. We opened, initially dropped, traded higher, sticking with bullishness, obviously until the highs priced in. And then we got a strong rejection lower. So are we looking at the high of the month? Potentially. And then what I would be looking for in the lower time frames is to see, does order flow remain bearish? If we see that, and I'll tell you exactly what that means and what I'll be looking for, but if we do see that, then my attention comes to this monthly fair value gap here below market price. So if we lose these two wicks here, which in and of itself is a great pool, but that's not really important. But if we start to lose that level to the downside, then we are going to trade down into that monthly fair value gap. So that's what I'm watching, but it's going to be subject to order flow on the lower time frame. So looking at the weekly chart now from here, really nice plunge on Friday, way over delivering what would be reasonable. And they dropped it all the way down into this weekly imbalance here. This weekly fair value gap, market dropped, traded down into it, stopped at the midpoint of that there. And now what I'll be watching going forward is how we trade there. So do we see the market close below it, hit it, start to sell off? My attention jumps to these smooth lows down here. A lot of people are long the stock market, and there's a lot of liquidity, a lot of money sitting down here at these relatively equal lows. However, we do have to lose this fair value gap here in these two down close candles. So like I said, the monthly gap down here is only in contention or in play if order flow remains bearish. And these are the exact levels I'm going to be watching to measure that. So if we are going to be bearish, we want to see the opposite of what we were looking for when we were bullish, right? Which is down close candle, using it as support, rallying higher, down close candle, use it as support, rally higher. Same thing we saw initially in the previous week, but then we see that's changing now, right? Down close candle completely smashed through. And if we smash through these two down close candles as well, then it's going to be an easy run down into these lows down here, and then all the way down to that monthly imbalance down here. All right, so we're finding this down to the daily chart here. So here we have our monthly opening price. So they pumped it higher into a deep premium here. I kept trusting buy models, looking for higher prices. Money was made on Friday going long. And then again, what happens after 10:30, I really don't care about, because what I'm doing in my trading is trading liquidity runs generally from 9:30 to 10:30. That's a sweet spot that I'm looking for. And what the market does after that is usually inconsequential to me. So we saw a really nice plunge on the other side of 11 o'clock. on Friday, and now that gave us great insight going into this week. So really nice drop, really leaving everybody holding the bag up here and just sinking it lower into this weekly gap here, which you can see with the blue rectangle. Sorry, I haven't done a good job of labeling my levels here. So this is that weekly fair value gap we were watching, and they just took the elevator ride straight down into the low here and these lows here. Like we talked about before, markets rally really slowly because they take this stair step higher, and it just takes the elevator ride down. So I'm looking for the elevator ride to continue as long as we remain below this bearish breaker here. We do not want to see the market get above that breaker. So it can reasonably retrace, and then how we trade here will be significantly influential, because if we're going to make higher highs and trade back higher, then we will invalidate this bearish breaker block and trade all the way through it. If we do that, then I'm neutral to bullish. As of right now, though, given the energy, the displacement we're seeing on the downside, I'm going to watch how we trade inside this breaker. So see some mitigation and then see this thing roll over to the downside. You can see here all these equal lows here. So we have an original consolidation, rally, first stage accumulation, second stage accumulation, smart money reversal, and I'm looking for the market maker sell model to complete. And then we have all these sell stops down here that, in my opinion, are very juicy. But again, those juicy sell stops are only a factor as long as we remain below this bearish breaker. So keep that in mind going forward. All right, working down into the 4-hour chart here, we can see that breaker on the daily chart a bit more refined here. Let me move this over here. Move this over here. And then you can see the market just taking the elevator ride down. So looking at kind of what sets the stage for it, you can see distribution taking place here when you see the market running out a high, pulling back into the range, running out a high, pulling back into the range, running out the high, pulling back into the range. That's a market that's not signaling strength, right? Signaling strength in the sense that, like what we were seeing down here, right? When it takes out a high, it just completely runs it, right? High here taken out, completely runs through it, right? This high here completely displaces through it. So whenever you see that, that's boding well for very strong institutional order flow. But then whenever you start seeing the market rally, drop, rally, drop, rally, drop, and it can't really sustain itself, you're kind of starting to see like a 3 drives pattern. Now, I did not know they were going to send it this much lower in one day. I don't think anybody really anticipated that. Now, as the run's developing, as you're reading order flow, can you absolutely get insight that the market's going to keep dropping? Absolutely. But just an absolute crazy plunge on Friday, and the market was really indicating it was running out of steam. However, I was still a buyer on Friday, made money, got paid, went to the sidelines. So it was really inconsequential to myself. But now going forward with that insight, we got strong indications of a reversal here. And then they just absolutely sunk it into all these equal lows here. So what I'm watching now as it relates to the 4-hour time frame is this breaker here. So these 3 consecutive down close candles, it can trade up into it, but we'd want to see it ideally stay in the lower half and break down. This gap here, we do not want that to fill. So the 4-hour candle on 10 a.m. Friday, October 10th, if we're going to remain bearish, I want to see this act as like a breakaway gap idea. So I do not want to see this imbalance filled. So now if we have this perfect recipe of this being a breakaway gap, this bearish breaker keeping price at bay, and then we see the market trade higher and rotate lower. If we see those things, then that's going to be an easy sell-off into all these lows down here. So that's what I'm going to be looking for going into the new week, but I need to see those very specific signatures. If we don't get that and the market just, let's say it trades all the way up through the breaker, then I'm going to have to pivot and take that information as I get it. The good thing is when you're a scalper, when you're intraday trading and you're just looking for easy liquidity runs, you don't really need higher time frame analysis. Obviously, it makes it much easier if you know where the monthly, weekly, and daily is going. But as a scalper, as someone who knows how to find liquidity runs every day, there's always fresh bread. So let's say the market invalidates what I'm looking for and trades higher. No problem. We'll get in line with it, make money, no skin off my back. So these are the levels I'm looking for. Do not want to see the market get above this breaker. It needs to respect it if we're going to go lower. And again, ideally, this will be a breakaway gap up here. And we'll just see a nice little elevator ride down into the sell stops here. And then you have to monitor how things go, because they could really sink this thing aggressively on the downside. So just some things to keep in mind. These markets are really expensive. They just pump them higher, do a premium, deeper premium, deeper premium. And who wants to chase and buy stocks, buy cryptocurrency at all-time highs? People that are FOMOing, fear of missing out. They think they're going to miss the next crazy bull run, and then they buy the top and they're left holding the bag. The same thing is happening in crypto, and the same thing is happening in stocks. Again, it's the market efficiency paradigm 101. Nobody's really interested in buying Bitcoin at 15,000 when it was consolidating, right? But now at 125,000, everyone wants to be a buyer, or not everybody, uninformed money wants to be a buyer of cryptocurrency. And you guys see that market efficiency paradigm in play every single day. So with that in mind, these lows down here are of interest as long as we see what I talked about here hold true. All right, so let me look at the usual assets here before we proceed. And then, like I said, I'll get into a few of you guys' questions and we'll go ahead and keep this rolling here. So, also, by the way, on the YouTube channel, I will be finishing the One Setup for Life series going into the next couple weeks or so. It'll probably be like a 5 to 6, 7 video series. So you guys can expect much more of that. And also looking forward to your guys' ideas on other series or other videos you guys would like to see. And then if I get some common requests, then I will look to get that done for you guys. So looking forward to your requests. If I see a few of the same ones, then I'll know that's a topic you guys want me to cover, and I'll be more than happy to touch on that. I did cover opening prices as it relates to the 9:30 open, but a lot of you guys were asking me before about, well, how do I use the 10 o'clock open and how do I use midnight open? The way I taught to look at 9:30 open, you can use that for all your respective opening prices. So if you may not be trading the 9:30 open, but you want to trade the 10 o'clock open or the 8:30 open or the midnight open, you use the same procedures that we talked about in the 9:30 opening. So, all right, looking at Bitcoin here, they took it higher here into all-time highs. So they took out this all-time high here at 125, and then they just sunk it into these relatively low lows here where traders would have their sell stop. So anyone that's long, they chase the breakout, they're left holding the bag, breakout artists buying at an expensive price, informed money, smart money traders selling at this premium level to the buy stops here, and then the market just takes the elevator right down into these relatively low lows here. So what I'm watching for Bitcoin, what you guys want to watch for Bitcoin is going to be this imbalance here. So this daily gap is going to be very important. How we trade here will be very significant. If we stay in the lower half and respect it and start to rotate lower, we have likely seen a long-term high here on Bitcoin. This is similar to the 2022 model. The reason the 2022 model works so well is because traders here are trapped long on a breakout. They see it drop, and some are still holding the bag. So then when they see it retrace here, they're hopeful. They're thinking, oh my gosh, man, maybe it was just a drop, and maybe it's just gonna keep going higher, and I'm gonna hold it. And then they start hoping, and then they see the retracement into the gap, and they start to get excited, and then rotates lower. That's why the 2022 model works so well. They trap them on the breakout. They retrace it, let them think that they should hold their bags because look, oh, it's going up. It was just a quick stop hunt. It's going to keep going higher. And then usually that's not the case. So buy the dip works, but if the dip keeps dipping, then you always want to keep some powder dry for that. But even zooming out here, I mean, look at where we're at on the weekly chart. I mean, buying up here, in my opinion, is not attractive price levels. I mean, if you're an investor or a believer in cryptocurrency and whatever, I mean, you really want to be long, in discounted prices. Up here at all-time highs, after we've already ran out several highs, in my opinion, isn't the best place to look to take long-term position trades way up here in premium. So something I'm watching for. We could see the market make a low, and that would be seen by us trading through this daily gap here. So watch this daily fair value gap. That's going to be very influential here going forward. Same thing on Ethereum here. We actually saw an SMT divergence with Ethereum and Bitcoin, so that's interesting to note. So SMT divergence, and then after that SMT, just a really nice rollover to the downside. So watch the same gap on Ethereum as well, and that's going to apply to all your other cryptocurrencies. So I know some of you guys may be trading Solana, all those different names that there are. Follow Bitcoin, follow Ethereum, and it'll tell you what it is that they're going to do. I guess a lot of altcoins, man, just got absolutely murdered on the drop. I mean, what percent drop was that? Yeah, I mean, a 55% drop. That's why, if you are having crypto as a part of your portfolio, you want to have it be balanced. Balanced meaning a well-rounded portfolio. Of course, not financial advice. However, for educational purposes, you don't want to have all your wealth in one asset class like cryptocurrency because it can take a big haircut. And if you want exposure to it, no problem. But if you balance exposure out with other assets such as gold, silver, cryptocurrency, then you can absorb the hit. So if you're looking to manage a portfolio and manage it well, you want to have a balanced portfolio with different things so that you're able to absorb hits as you're holding for these long-term position trades. And for those of you guys that are holding Bitcoin long-term, obviously you're not even worried about this short-term volatility anyway, and you're just holding for the long run. So it all depends on your strategy, right? And how you're looking to approach and attack the markets, if you're holding for long-term, if you're trading these markets. So it all depends on your strategy as to how you're going to manage it. But just some insight there. I know a lot of people are big crypto investors, and you want to be savvy and make sure you're managing your wealth well, because a lot of people and all these cycles here had a lot of wealth evaporated, unfortunately. So don't want that to be any of you guys. Alrighty. Pillow Boy, Dylan, can you give a risk protocol that you use for prop firms, like risk to reward, and what do you do when I'm in drawdown? Yeah, good question. So I usually get that question every couple weeks or so. And my answer is always the same. I'll never tell you what to risk. And that's going to really be determined off your experience, your skill level, and what you're comfortable with. Because I may be comfortable risking $250 a trade on a 50K prop firm account because it's not a big deal for me, right? But if you're a developing trader, losing, an eighth of your account, 1/5 of your account is probably one of the worst things to do. Right. So it's all going to depend on your skill level and your experience. So hopefully what you'll leave this conversation with is the skill for you to be able to identify kind of where you're at and what makes the most sense for you, because it's all going to be unique. We all come from different countries, have different perspectives on money, have been trading for different amounts of time, have different risk tolerances. So those are all things you have to learn if you want to do well in this. Because if your risk parameters, if your approach, your trading plan isn't aligned with your personality, then you're not going to find success. So one of the most important things in doing that is the things I talk about in all these videos: journaling, backtesting, learning yourself, learning what risk you're comfortable taking, right? And then over time, you're going to discover a sweet spot. Once you do, it's really easy to walk it forward, because now every transaction isn't life or death, right? You're sitting on the edge of your chair, palms sweating, stressing about the next transaction. Trading should not be like that. And the way you get it to be professional and smooth and calm is having a plan, having risk that's comfortable to you, which is determined based off your experience level and where you're at. Most traders blow up, especially in the prop game, because they're trying to do too much too quick. And I know it's hard, right? I know we need money to live and shit's getting hard and you need to get paid. Completely understand that. But you cannot allow that desire to need to make money quickly to come in and influence your trading, because if it does, you're unfortunately going to be in situations like many I've spoke to with credit card debt, just horrible things that happen if you come into this unprepared. So hopefully this conversation's inspired some thinking on your end so that you can reassess kind of where you're at, what makes the most sense for you. But I never tell anybody what to risk. Even people that I'm mentoring and working with directly, I'll sit down, I'll talk to them about all these things, ask all these questions, get an understanding of where they're at, then come up with a game plan. But unless I knew more information, I could never tell you what to risk, because it just all depends on where you're at and what your skill level is. If you're not consistently profitable for at least a year, I recommend risking 100, 150 a trade, something super light, because guess what? You won't blow the account, you won't be stressed out, and you can still take payouts risking a little bit if you know what you're doing, right? You only need to risk a lot if you have no idea what the fuck you're doing. If you know what you're doing, you don't have to trade high risk, because you can have low risk, high reward trades, which is what professionals are doing. So hopefully that makes sense. Hopefully that gives you enough to proceed forward. Paul, so even though we watch each asset's price action individually in the back of our minds, indices bullish, dollar bullish, rather suspect for indices to bend the knee, is the same for bonds? Yeah, exactly. So the bonds give value to the dollar because the currencies are a unit of debt. So they're going to be controlled by debt instruments like the bond. Well, the dollar, the currency, is going to influence the indices. So it's like bonds, dollar, indices. And the same way that dollar affects indices, right? Like if dollar's bullish, indices are bullish, eventually indices will bend the knee like we've been talking about. Well, the same thing happens with bonds and dollar. So if bonds are ripping, in the short term, they can move together like we've been seeing, but eventually one will have to bend the knee if market symmetry is going to come back in play. But with the climate we're in now, I mean, who the fuck knows? Who knows, man, what they're going to do with it? So I'm here on the edge of my seat watching just like you guys are. But the good thing is, as far as trading, it's easy money. Show up at 9:30. Where's the liquidity? Who are they going to gun for? And you got fresh bread every single day, and you don't even have to worry about all those additional things. But for more precision, for things that I'm doing in longer term analysis, position trades, investments, you do want to be mindful of all those factors. So meaning bonds higher, dollar higher, DXY bending the knee most likely? Yeah, more than likely. Or if bonds start to sell off, then that would just further support what we're looking for in dollars. So yeah, that's what I'll be monitoring going forward. Quick question. When scalp or swing trading, how do you effectively use internal range liquidity and external range liquidity at both the higher time frame and lower time frame? So when you are swing trading, right, it's essentially no different than, so here, let's take a look at this here. So let's look at this example here. So let's say you were looking to be bullish off this breaker here. And let's say you were looking for NASDAQ to trade much, much, much higher, right? Let's just use a hypothetical example here. So if the market's dropping down into that breaker, this would be a swing trade entry, right? Because you'd be buying on a 4-hour chart with a discount array. So you'd be buying a discount level, looking for higher prices. Well, scalping and intraday trading is the same exact thing. You're just taking it one step further, right? So if you're a swing trader, well, then you just enter here, stop here, it's done. If you're a intraday trader, you just take it one step further. Okay, well, I'm looking for the market to rally from here. So now I'll drop down to my hourly chart. Okay, nice wick, nice projection here. So we're bullish, sweet. Now look at the 15-minute chart. All right, we have 130. That's the beginning of the PM session. So nice little 130 Judas to the downside. Equal highs here. Boom, order block on the 15-minute. If you're a 15-minute trader, boom, order block. That's your entry right there. If you scalp and you're taking it, and you're not a day trader and you're a scalper, well, then you'll just keep refining. So then you take it now down to the 5-minute. Okay, 130 drops, equal highs here. The market's going to want to rally for these highs here, and it's going to want to clear them. Great. So now you just buy the fair value gap here after the shift in market structure on the 5-minute. And now if you're an intraday and really lower time frame scalper, then you just drop it down to the 1-minute, right? And then you just take it one step further from there. So then you come in and then you just refine down what you would, the same thing you'd be doing on the 4-hour chart. And now you're just looking at it on the 1-minute. Okay, drop down, take out sell side at 130, displacement higher, shift in market structure, PM first pres, go long, ride it higher. So it's all the same thing. It's all the same price. It's nothing different. You just have to understand top-down analysis and how to zoom into the lower time frames. But it's very simple when you're taught how to do it correctly, because it's not reinventing the wheel for swing trading or scalping. You're doing the same thing. You're just zooming into the fractal more for more precision and more refinement on the lower time frames. So there's no difference. It's all the same thing. It's all the same price. It's just a matter of how you're going to engage with the market. Dren, see gold? Yeah, let's see what gold's doing. Yeah, gold's gonna keep ripping. So all I can say on gold is we got ourselves a blue sky breakout. So blue sky breakout on gold, and it's not stopping anytime soon. So the party is not over on gold. It's going much higher, like we talked about, guys. Like I told you guys last week, this trade that you're seeing on gold, it's not because the government shut down, right? It's because there's no confidence in the financial system. So big money is flowing into assets that is going to help them preserve their wealth. Gold, metals, real estate, all assets that are going to retain their wealth as the currency continues to be inflated. So gold's going much higher on the back of that. And like I talked to you guys last week, the buying in gold is central bank driven as well. So if the central banks, the people that create these bullshit fiat dollars, if they're buying gold, that should tell you something, like we talked about last week. Viking, do you do market analysis for London session in your Discord? No, not yet. But if I can bring on some skilled traders that can work the London session, I'd be more than happy to. But until then, just New York for now. But I would love to have some skill around me that can navigate the London session. If you can do that, let me know. Benson, according to you, Dylan, what does consistency means to a trader? What needs to be done by a trader to stay and remain consistent and develop and grow as a trader? Awesome question. So consistency in trading comes from having structure and a process, right? Fuck the money. Don't even think about it, right? The money's not important until you have these things, because money is a derivative of doing the right things in trading, right? Money in and of itself shouldn't even be a factor. The reason people lose their ass is because they're just focused on the money and they're not focused on the structure, the process, the journaling, the actual work that needs to be done to get profitable. So when I say consistency, you need to have structure to what you're doing, which means you need to have the ability to read price. You need to have a simple executable model. You need to have a trading plan that keeps your risk managed, controls your trade frequency, tells you what days you can trade, what days you can't trade. And what that's going to do is anchor your decisions to rule-based procedures. And if you can follow that and stay disciplined and stay consistent, then you can start seeing consistent returns at the end of the month, at the end of the quarter, and at the end of the year. So when we talk about consistency, the way you get to consistency is you first need structure, right? Structure to your trading, rules, why you're doing certain things, and it needs to be aligned to your personality. Once you have that and you can execute on it consistently, then you will start seeing consistency in your profitability. But it's never the other way around. A lot of people think, well, yeah, I'm just going to get profitable, make some money first, and then I'll take it serious. Then I'll be a professional, right? Never works like that. You're just going to stay in the same cycle, unfortunately, for more months, more years, until you come to the realization that you need to dial in on your process. And then once your process is dialed in, consistency is effortless. Waleed, is the government shutdown influencing the market? I'm a firm believer in the market's going to do what it's already going to do. And the excuse that they justify what the market did to the public is irrelevant, in my opinion. So did Trump and the shutdown crash the market? Did they pump it into a premium and sell into it to expect this drop already? And then they use the headline to drop it? That's what I think. So that's my opinion. I don't think it has any effect on it. I just think it's the excuse to explain to John Q. Public why the market did what it did. And oh, that makes perfect sense. Yeah, Trump's misbehaving, making some mean tweets. Of course, the market's going to drop, right? But I don't think of it like that. But they do need a reason for the public to believe why the market did what it did. Because it's selling pressure, right? Selling pressure, send it lower. Keto, is it not worrying that there's no S&P at the highs on indices? Not that I can see. Yeah, I believe there's pretty major S&P, I believe. Let me double check. So we'll look at NASDAQ, ES, and then we'll pull up the Dow here. All right, I'm trying to zoom in. Hopefully you guys can see that all right. So looking at Wednesday, Thursday, Friday, we made higher highs on NASDAQ. Looking at S&P here, which is the middle panel, also made higher highs. And then what did we see at the same time in the Dow? At the same time that we were seeing higher highs Wednesday into Thursday into Friday, we saw lower highs on Dow. So there was an S&P divergence here. May not be obvious, but you can see the distribution taking place visually in the charts. So looking at this here, Dow is not making a higher high while we were making higher highs across NASDAQ and the S&P. So yes, there was a S&P divergence. And especially for those of you guys that have been live with me, but for those of you guys that have not been, one of the things that you've been seeing in the markets is we've been seeing a lot of disjointed markets or lack of market symmetry, meaning NASDAQ higher, S&P higher, Dow higher, everything moving together. We've been seeing a lot more of a decoupling between those markets. And generally, whenever you see extreme decoupling, that's a sign that we're likely starting to see some cracks and we're likely going to see the market shift and rotate to the other side. So that's additional insight that we've been talking about all the time. Man, market's always decoupled, especially for the last like couple weeks or so. Usually when you see that, that's SMT on a higher time frame, and it's telling you that something's about to shift. So that's how you can also blend that insight into it as well. So there's the SMT key. Hopefully that makes sense. Daniel, on dollar this week, I was expecting the low of the week. It didn't happen. How can I change comfortably and enter a trade without discount? Hold on. What? Dollar this week? I was expecting. Yeah, so for dollar, you have to understand kind of where we're at in the structure, right? So where did we close the previous week? Inside that order block. So they already offered price once, twice, and 3 days inside that bullish order block. And then on Sunday, we saw the gap opening higher. So when you see that, it's already leaving a discount array. So because on the daily, we're bullish and it's leaving a discount array here, the bias is bullish for Monday, Tuesday, Wednesday, into Thursday until we reach targets. And then Friday, you can have market reversal profile or retracement back into the range. So you have to understand your PD array matrix on the daily chart where's the market going, where's it coming from, and then you just zero into your lower time frame, right? So if we're leaving a bullish order block here and we're expecting bullishness this week, to drop down into your 15-minute chart, right? And then buy anything and it'll go up. So hopefully that makes sense. You have to understand where the market's going, where it's coming from on the daily chart as it relates to your premium and discount arrays, and then it becomes pretty simple what you should be doing. Appreciate it very much, Dylan. Thank you. Yeah, glad to help, man. But who knows? Yeah, who knows? Yeah, it'll be interesting to see if we get going forward. Aslam, hey Dylan, what do you think that with this displacement lower through the lows, this provides a market structure break? Yeah, that's what I'm thinking. That's what I'm subscribing to right now. Yeah, absolutely. That's why that breaker is a market structure shift or break in and of itself. That's why that breaker is very significant in my analysis. Joe, great explanation of the swing trade approach. Yeah, awesome, man. Glad it was helpful. Thanks for the answer. A quick question. How do you effectively use internal and external? Yeah, great question. So internal and external is very simple, right? You have to understand where's the market drawing to, right? So we'll look at this price run here. Let me take everything off here. So the bias has been bullish all throughout here, right? So what do we see? We have a range low, range high, internal range liquidity here to the external. We now have a new dealing range low, range high, drops down, internal range liquidity right out to the external. We now have a new intermediate term low. We now have a range low, range high, drops down into a discount, internal to external. Very simple stuff. But you have to understand where the market's drawing to, right? And then once you understand that, it's easy money, because the way market makers and smart money traders engage with price, it's very simple what they're doing. You know, they have a very simple playbook, and it's easy to see when you understand what components you should be looking for. Carl, when do you use wicks and bodies for optimal trade entry? So for optimal trade entry, I do it, keep it simple. I just do wick to wick. So if you're measuring your dealing range, if you're measuring your optimal trade entry, wick to wick is solid. There's a more advanced, I mean, you can measure it to the order block, to the actual change in state of delivery, but that's like way beyond like what I'm going to share here on YouTube. That'd just take a lot of explanation for me to explain. So wick to wick is perfect. Alrighty. Do you believe in daily bias candle closure? I have no idea what that means, brother. I do use daily bias, and candle closures are very important. Understanding the bodies, how the market's trading, the information that's giving you. So I don't know if that answers your question specifically, but that's what I do if I understand you correctly. Do you use the midnight opening range? Absolutely, I use the midnight opening range. It is a killer of a level. All right, Benson, come back to your questions here. You asked me quite a few. What advice would you give to your younger self when you were still learning? Slow the fuck down. Slow down. Get consistent. Don't be in a rush to make a lot of money. Take it nice and steady. There's one thing I would tell myself, it'd be that. And my learning process would have been so much easier, so much better for it if I just wasn't in a rush to do what I had to do. But, you know, clock was ticking, world's going to shit, so I had to make things happen. But that's what I would tell myself. What does your daily trading routine look like from start to finish? Yeah, it's an awesome one. Yeah, so I get up in the morning, go for a walk, get some sunlight in my eyes for at least 10, 15 minutes. Come here, do my pre-market analysis, usually 20 to 30 minutes for market open. Go live, share my pre-market analysis with the community, and then I get to work, get to trading. Once I'm done, usually 11 o'clock, I'm getting the hell out of the office, because anything past 11 o'clock for me is going on 2 hours of trading, and that's already more than enough for me. So usually at that time, I'm getting out of the office, and I usually have team calls, team meetings that we have to do there, hit the weight room, and then I'll come back and then do my PM session work that needs to be done, whether that's trading, usually not, but usually other business-related things. What habits or practice help you stay disciplined and avoid impulsive trades? Yeah, so how we do one thing, we do everything. So if you're lazy in your personal life, not going to the gym, you're not reading books, you're not doing things to strengthen yourself mentally outside of trading, you're going to be a shit trader. So if you want to be a good trader and you want to be disciplined, you want to follow your rules, be disciplined in every other aspect of your life. Get to bed on time, eat clean, go to the gym, do the hard shit, because then it'll translate into your trading when you have to do the hard thing and stop trading, stop gambling, size down. And it's easier to do those things as you strengthen your mind. The mind is a muscle. Train it, make it strong, and that'll translate into trading. Excellent questions, Benson. All right, guys. I think that's all of them. Can you touch on Costco? Yeah, I'd love to. Costco. Since I've been in Panama, it's been a little while since I shopped at Costco here. All right, so Costco, we're looking like we're in a sell model for Costco. So we're seeing bearish order flow here. Watch this. Let me look at the monthly here. Yeah, so Costco looks heavy, and especially if we're going to start seeing the broader market rotate lower, then Costco will likely keep selling off as well. So watch this gap here on Costco on the weekly chart. We traded up into it and this up close candle here, bearish order block. And then you see we traded up into it and then we rejected and closed below it. So if we're going to see weakness, we want to see it sell off from here and then attack these lows here. And then these equal lows here look pretty juicy to me. But that's only true as long as we remain below that weekly fair value gap. All right, guys, that's going to be it for me. Hope this one was insightful. I see a couple questions on the midnight opening range. I would love to give you a quick explanation on how I use it, but unfortunately there's a lot of moving parts to it and a lot of other things I'd have to explain for you to understand how that level is utilized correctly. But ICT has some pretty good work on how to use the opening range as a good introduction. So if you want to check that out, that's good. But for me to explain how I use it from a power of 3 perspective to frame my setups, you'd have to understand like gap theory. There's a lot of things you'd have to understand for me to explain that effectively and do it justice. So maybe I'll do a YouTube video on it later on as to like how I use it and how I find consistency with it. But just know it's a powerhouse of a level. Do you agree that order flow on the higher time frame PD arrays? Do you agree that the order flow? Yeah, absolutely. Yeah, so the markets are top down, right? So the higher time frame is going to be way more influential over the lower time frame, right? So any higher time frame key level you have is going to be influential on the lower time frame, right? Kind of like the example we just talked about here with NASDAQ, right? Like for example, even just the little rally we got off that breaker here, right? Dropping down to the breaker, but that's a higher time frame key level, right? So even if there's like a hourly or a 15-minute fair value gap here, the market's bullish. So it's going to trade through that 15-minute bearish gap because higher time frame, the market's leaving from a higher time frame discount when we're bullish. So definitely your higher time frame key levels are going to be much more significant over the price action than your lower time frame levels. But the secret is like the way you find consistency with it is you have to blend it. You have to blend your higher time frame analysis into your lower time frame. And that's what takes skill, study, and repetition to do. But once you're able to do that, the whole market unlocks very easily. Shiv, no problem. Thanks on backtesting as well. Yeah, if you're using the backtesting approach I gave you and you're looking at and studying those key levels, that's an amazing start. Absolutely. All right, guys. Appreciate your time here. Thanks for joining us. Thanks for your amazing questions as usual. Thanks, Joe. Enjoy the rest of your Sunday. Will do, Joe. You guys go ahead and do the same. Have a phenomenal rest of your Sunday, guys. Enjoy the 3-day weekend. Remember what I told you guys at the beginning of the stream. Stay safe. Take care. Shit's probably going to get crazy, especially in the markets as it relates to the delivery, the volatility. So be very mindful of the risk side of trading. Don't want any of you guys to do any damage to yourselves unnecessarily. With that in mind, guys, take care. Stay safe. See you guys in the next one.